Imagine this. You're playing a high-stakes battle royale. You've got the best loot. Your ping is low. You're dominating the leaderboard. Suddenly, your character freezes. The world stutters. You're disconnected. You check your router. It's fine. You check your ISP. No outages. Then you realize you weren't on your own fiber. You were leeching off a neighbor's Wi-Fi, and that neighbor just changed the password. That neighbor is Japan, and your high-stakes game is the global economy. For 30 years, you've been living in a simulation of prosperity. You thought your tech stocks went up because of innovation. You thought your house value spiked because of scarcity. Wrong. You were just riding a wave of cheap yen, a multi-trillion-dollar liquidity glitch that turned the world into a giant casino where the house never lost. Until now. The password just changed. Boom. To understand the crash, you have to understand the coma. 1992. Japan's asset bubble didn't just pop, it nuked the entire server. Real estate deleted. Equities formatted. The Japanese economy entered a lost decade that turned into a lost generation. Imagine a computer that hits 100% CPU usage and just stays there. No growth, no inflation, no wage hikes, just a flat line on the EKG of capitalism. The Bank of Japan panicked. They did the only thing central bankers know how to do. They lowered the cost of money. They dropped rates to zero. Then, because they're overachievers in failure, they went sub-zero, negative interest rates. They literally paid people to borrow money. Then came the final boss, yield curve control. Think of yield curve control as an infinite health cheat code for government bonds. The BOJ decided that the 10-year bond yield would stay at zero, regardless of what the market wanted. They superglued the interest rate to the floor. Simple. But there's a biological glitch in humans. We hate idle capital. If your money isn't growing at home, you send it abroad. Japanese pension funds, insurance companies, and retail Mrs. Watanabes looked at their 0% domestic returns and realized they were starving. So they went shopping. They became the largest foreign holders of U.S. treasuries. They bought your mortgages. They bought your corporate debt. They became the world's ATM. Japan wasn't just a country anymore, it was a global subsidy for everyone else's lifestyle. Enter the carry trade, the ultimate financial exploit. Imagine you're a pro gamer who finds a gold farming glitch. You borrow 1 million yen at 0% interest. You convert that yen into US dollars. You take those dollars and buy US treasuries yielding 4% or 5%. You're pocketing a 5% spread on money that isn't yours. It's free real estate. But humans are greedy. Why stop with boring bonds? Investors took that borrowed yen and plowed it into Nvidia. They pumped it into Bitcoin. They used it to flip luxury condos in Miami. This wasn't just investment. It was a global leverage fest, fueled by a currency that cost nothing to carry. At its peak, this trade was estimated in the trillions. It was the dark matter of the financial universe. You couldn't always see it, but you felt its gravity pulling every asset price higher. The world was running on Japanese Wi-Fi, cheap, fast, and seemingly infinite. The assumption that Japan would stay in its coma forever, that the BOJ would never wake up. Nah. 2024, the software update no one wanted. Inflation finally hit Tokyo. The BOJ looked at the world and realized they couldn't keep the infinite health cheat active anymore. They ended yield curve control. They raised rates, not by much, just a fraction of a percent. In a normal world, 0.25% is a rounding error. In a world leveraged 100 to 1 on the carry trade, it's a death sentence. Suddenly, the free money isn't free. The cost to borrow yen goes up. The cost to hedge the currency risk goes up. The yen itself starts to strengthen. Think of it like a margin call on a global scale. If you borrowed yen at 150 to the dollar and it moves to 140, your debt just got 7% more expensive in dollar terms. Panic. The S&P 500 freaks out. The Nikkei drops 12% in a day, the worst crash since 1987. Why? Because the gold farming glitch was patched. Investors had to sell their winners, Nvidia, Apple, gold, just to pay back the yen they borrowed. This is called repatriation. The tide of capital that flowed out of Japan for 30 years is starting to flow back in. The ATM is out of order, and it's demanding you pay back the balance now. Most people watch Jerome Powell like he's the main character. He's not. He's a side quest. The real boss is the bond market. As Ray Dalio, the guy who manages more money than your entire bloodline will ever see, puts it, the bond market is the backbone of all markets. It sets the risk-free rate. It's the baseline for how everything else is priced. The Fed controls the short end, the overnight rates, but the long end, the 10-year and 30-year yields, is controlled by supply and demand. The U.S. government is currently running trillion-dollar deficits. We are printing debt like it's a limited edition skin that everyone needs to buy. For decades, Japan was the price-insensitive buyer. They didn't care about the price. They just needed somewhere to park their yen. If Japan stops buying, who fills the gap? If demand drops and supply keeps rising, the price of bonds crashes. When bond prices crash, yields skyrocket. This is the biological glitch of the U.S. economy. We think we can cut rates to save the system, but the Fed can cut short-term rates all they want. If the global market loses appetite for our long-term debt, those yields stay pinned to the ceiling. Higher yields mean your mortgage stays at 7% even if the Fed cuts. Your tech stocks get revalued at lower multiples. Your credit card interest remains predatory. The soft landing is a fairy tale. You're landing a 747 on a runway made of wet paper. Good luck. Liquidity is the oxygen of the markets. When it's plentiful, you don't even notice it. You're just breathing. When it's gone, you're clawing at your throat. The Japanese carry trade was a massive oxygen tank. It allowed the U.S. to run massive deficits without the suffocation of high interest rates. It allowed Silicon Valley to fund disruptive startups that lose billions. It allowed you to feel wealthy because your Zestimate went up. But the tank is running dry. Traditional media won't tell you this. Why? Because cross-currency basis swaps don't get clicks. NVIDIA is the future of AI, gets clicks. Doom scrolling about political drama gets clicks. They want you focused on the loud, visible stuff, the headlines. The real threats are quiet. They're boring. They're mathematical. They happen in the plumbing of the system, not the penthouse. When the cost of money changes everywhere, the value of everything changes. If you're waiting for a pivot to save your portfolio, you're playing an old version of the game. The devs just pushed a massive balance patch. Your favorite strategies are now nerfed. Adapt or get liquidated. The world is waking up from a 30-year hallucination. We thought we'd discovered a way to have infinite growth with zero-cost money. We didn't. We just borrowed it from the future. Using a Japanese credit card we thought we'd never have to pay back. The bill is in the mail. If you want to understand the mechanics of the algorithm before it taxes every one of your moves, you need to stop watching the news and start watching the flows. Finance isn't about money. It's about energy and incentives. And the incentives just shifted 180 degrees. I'm here to shine a light on the glitches they want you to ignore. If you found this blunt, good. The truth isn't supposed to be comfortable. Drop a like if you're tired of the oversimplified garbage on your feed. Subscribe if you want the high-density breakdown of the economic software running your life. And comment below, do you think the Fed can actually stop the bleeding, or is the Japanese Wi-Fi gone for good? Stay sharp. The system doesn't care about your feelings. It only cares about the math. Boom.